Now, sentiment towards SA government bonds has soured ahead of the SONA budget speech and national elections. This as a Bloomberg survey on emerging countries' debt has revealed that South Africa forms part of the bottom 28 nations. RMB fixed income trader Michelle Wohlberg joins us now to discuss the trends playing out in the bond market scene. Thank you so much for your time, Michelle. Let's actually start off with what we saw in the previous year. I mean, just take us through the overall supply and demand dynamics that characterized the South African bond market in 2023.
In 2023, that's a long time ago by the sounds of things. I don't know how your year's been. My year feels like it's flown by.
Exactly.
So I think, we've gone through a period of time where the market has been quite worried about South Africa's fiscal position. And, you hear all these articles coming out where there's a lot of debts, and the interest cost of South Africa's government is starting to weigh into being able to invest that cash elsewhere and use it for better goods. So funding has obviously been an issue, but in order to be able to provide infrastructure for South Africa, we need to be able to fund it. And first place we do that is in the government bond market. Funding has been stock standard. Thankfully, they haven't increased the auction sizes last year.
Yeah.
But they did tap into a very different types of instruments. So there was the FRN, which is the floating rate note. They also issued a Sukuk bond. I think they've realized that the traditional methods of funding isn't necessarily where they're going to be getting their bread and butter. So they're trying to diversify their funding and play to a different pool of investors, which has worked out quite positively for them.
Well, let's look at the current data, because there was a government bond auction today. So just give us the lowdown on that.
Yeah, so this year we've actually seen a little bit of a pause in investor demand for the weekly auctions. We haven't seen bid to cover ratios, which is the amount of bids to the amount of bonds on offer, above 3% this whole year, or above 3% this whole year, which just indicates that the demand for government bonds isn't quite there. So you basically weighing on a certain amount of investors who are members to take a majority of these auctions. And I think one of the main reasons behind this is obviously all the event risk that we have coming up. So State of the Nation, I doubt that will be a massive market mover, but budget in 2 weeks' time, definitely a market move. And I think there's a little bit of uncertainty with regards to how the budget will go. So that's why we're seeing hesitancy in the bond market at the moment. And then obviously elections. When elections come through, that could be a massive market changing force. And investors want to be sure before they put a lot of cash into things. So muted demand, but not shocking. We're not seeing COVID type levels come into play here. So at least that's a positive over there.
Well, as you're talking about that risk event that is coming up this month, that is the budget, what exactly will bond investors be looking out for there?
So I think, there's obviously, when you talk about issuance and supply, or supply and demand, the more they issue, the less demand there is, because there's more paper available. So one of the big things that investors watch out for in the budget is whether issuance will increase, and if issuance does increase, where are they increasing this issuance? Is it SAGBs? Is it on the inflation linker side, or are they trying to find other avenues to fund their deficit? One of the bigger themes at the moment, and what investors are looking out for, is whether the National Treasury will tap their FX reserves and potentially use that to fund the shortfall at the moment. I do think that if they do that to a certain extent, obviously not tap everything at the moment, but maybe take a little bit of that, it could potentially be quite bond positive. But yes, that's what investors will be looking out for. If issuance increases dramatically, we'll probably see the curve steepen back-end bonds will be very expensive.
Yeah.
And it will be expensive for South Africa to fund their infrastructure bills.
Well, that's the thing, because I also want to ask, because obviously on the tax side, things aren't looking that great. Does the issuance significantly increase typically in an election year?
I think I actually wouldn't know about issuance,
Yeah.
whether it increases. I do know that the spending, that a government spending does increase in an election year. So,
Yeah.
when we talk about potential, like a basic income grant, will that be announced at this year's budget in order
Yeah.
to appease the investor? Maybe. Issuance, I think, is more depending on, what the balance sheet looks like at the time. I think if issuance does increase to be able to fund that excess spending that they're doing because of elections,
Yeah.
that would be very market negative, because it's basically stating to the market that you're trying to buy votes. Maybe.
Yeah.
I don't know.
Yeah. No, I hear you. I hear you. Well, thank you so much, because of course these are the things that we need to know ahead of these risk events, the budget, elections, on how investors are navigating that risk. Thank you so much for your time and for your insights today, Michelle. That was RMB fixed income trader Michelle Wohlberg.